Shah Gilani with us now from Capital Wave Strategist. All right, Shah. Any reason to believe that after these massive gains, it's time to pull back and take your money out of any of those big five?
No, at this point, no. This is we're at a junction where you just continue to ride these stocks. I love the fact you're calling them the Fab Five, because that's what they are. They're leading. The index is higher. As far as technology goes, they are at the leading edge of every aspect of technology in our lives. So there's no reason to sell these right now. What we do is we put stops on them as they go higher. We raise our stops a little bit. If the market pulls back, and I'm a little bit cautious in here, if we get a bit of a pullback, I wouldn't mind taking profits. But if we don't get a pullback, I want to continue to hold these things. These are great stocks to own for sure.
Now, some people come up to me and say, hey, just like 1999, this is the dot-com thing all over again with these big technology companies. Is that a valid criticism?
Absolutely not. Not even close. This has got nothing to do with eyeballs. Excuse me, and the idea that folks are going to eventually monetize, these companies are going to monetize the eyeballs that they have. These are earnings companies. They're operating businesses with fantastic earnings, with tremendous growth prospects. This is nothing like 1999. There are certainly maybe some stocks at lower level technology stocks that are scrambling to try and get to monetize users, et cetera. But these companies, they're nothing to do with 1999. This is the future. It's here, and it's going to continue this direction for these companies.
You know, Shah, right after the election, you were the one who said this market's going to go straight up. It went straight up, and then you said, well, this market's going to go to 21,000, and it did. We're now at 20,847. Are we going to keep going up on this market?
Fundamentally, there's no place to go but up. I mean, I've said this on your show many times. Fundamentally, there's always more capital being created every single day, and there are fewer and fewer shares because of the buybacks, because of mergers and acquisitions, because of the fact that we don't have the IPO train that we used to have years ago. There are fewer and fewer shares for investors to purchase. So stocks fundamentally have nowhere to go but up. Doesn't mean we're not going to see a correction or pullback now and then. The market, to me, is a little bit toppy in here, and we could see a bit of a sell-off. But fundamentally, underlying all of this is bullishness all around. So I think the market can double in the next 5 years. Really, it's got nowhere to go but up.
Double in the next 5 years, nowhere to go.
Absolutely.
But
if you look at the earnings growth potential for these companies, and you look at, again, fewer shares, more capital being created, this is where the money is going. It's not going into bonds. The return isn't there. The return is in equities.
I think you've just got a rousing round of applause from every single viewer who's invested in any stock anywhere on the planet. You're all right, Shah. I think people like you. Come again, okay? Thank you very much, Shah Gilani. Good stuff.